Welcome to another episode of China Update, where I provide you guys with the most up-to-date political, economic and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in. Happy Thursday, everybody. For weeks now, large parts of the less economically important parts of China, regions like Gansu, Henan, and Guangxi, to give just a few examples, have seen lockdowns. However, with the exception of some districts of Shenzhen just recently, critical logistics nodes have remained relatively open since Shanghai ended its 2-month lockdown. Over the last 48 hours, however, the zero-COVID gods have proven to be cruel deities. Despite very few officially recognized cases, large-scale lockdowns are being reintroduced to districts in the economically critical cities of Wuhan and Shanghai. After the discovery of 4 asymptomatic cases on Tuesday, for example, almost 1 million residents of Wuhan's Jiangxia district have been told to stay in their homes and not to go out unless necessary. All public transport has been stopped and entertainment venues shut for 3 days. 4 neighborhoods in Shanghai's Baoshan district were put back into lockdown this week. People in the affected areas have been required to remain within their residential communities for 7 days. Last Saturday, another Shanghai district also put 4 neighborhoods into a 7-day lockdown. There is a bit of good news on the COVID front, however. After more than 2 years of suspension for COVID control, the capital, Beijing, is gradually restoring direct inbound passenger flights from overseas. More direct flights from Paris, Tokyo, and the United Arab Emirates and other major hubs have been restarted. This combined with the decision in late June to halve the length of time incoming travelers must spend in a quarantine facility to 7 days has helped ease what remains some of the toughest pandemic border control measures in the world. And while international businesses are happy with the loosening, it's not enough. Quote, China remains isolated in a world that's mostly pivoted to living with the virus. Anyone wanting to travel to the country faces a list of requirements and possible disruptions, and a potential increase in inbound flights is constrained by a rule that limits airlines to just 1 international flight a week, as well as passenger caps and the potential for suspensions. On July 26, Veriflight's data showed 94 international flights going to and from China, down from 2,883 on the same day in 2019. End quote. This week, General Secretary Xi Jinping convened a study workshop for provincial and ministerial officials. A similar workshop was held in July of 2017 in anticipation of that year's 19th Party Congress. The idea of this workshop is to set the tone for the upcoming 20th Party Congress. State media reported on Wednesday that Xi had addressed these key officials at a 2-day study session emphasizing the importance of the 20th National Party Congress, quote, to be held at a critical moment on the new journey to build a modern socialist country in all aspects, end quote. She said that the Party Congress would set up China's development goals and major policies for, quote, the next 5 years or longer, end quote, so the country could basically achieve socialist modernization by 2035, again to use the language of state media. The risks and challenges that need to be dealt with and the contradictions and problems that need to be resolved are more complicated than ever. The whole party must enhance the awareness of urgency, adhere to bottom-line thinking, strengthen the will to struggle, and strengthen the ability to struggle. End quote. The Congress is expected to be held in April. On this general theme, over the weekend, a symposium on studying Xi Jinping thought on diplomacy was held in Beijing. People's Republic of China Foreign Minister Wang Yi addressed the event. Now it is worth quickly examining some of the language employed in Wang Yi's speech here, as it gives us clues as to how Beijing views Xi Jinping thought on diplomacy, an ideology which, if Xi succeeds in getting a 3rd term this year, will likely inform a generation of diplomacy and diplomats. Quote, Xi Jinping thought on diplomacy has provided the fundamental guidance and the guide to action for conducting China's foreign affairs in the new era, provided Chinese wisdom and solutions to major global issues, and helped create consensus and synergy for human development and progress. End quote. We can hear in this articulation feelings of grandiose purpose and historical significance, even a sense of glory. Quote, General Secretary Xi Jinping scientifically analyzed the evolution of China's external environment and made it clear that China's development is still in a period of important strategic opportunities. We must struggle to the end against all forces that attempt to subvert the leadership of the party and our socialist system. End quote. Hey guys, as always, if you're enjoying today's video or getting some value from it, don't forget to hit the like button. If you appreciate this sort of content and would like to continue seeing more of it and you haven't subscribed, maybe consider subscribing. And as always, anyone who wants to go the extra mile and help keep China Update financially sustainable, it's just me that makes these every day. Patreon and Buy Me a Coffee links are in the description below. Thank you so much, everybody, for the ongoing support. Last up, the Chinese economy. We're talking about Alibaba as well as the housing crisis. Let's start with the technology company. In a move suggesting that Chinese companies, especially technology companies, facing intense scrutiny from regulators in both China and the United States, looking to reduce risk, technology giant Alibaba is seeking a primary listing in Hong Kong. Alibaba's shares rose more than 5% in Tuesday morning trading in Hong Kong after hearing the news. The move will also likely make the e-commerce titan more accessible to millions of Chinese traders, as the primary listing opens access to a program that connects capital markets in Hong Kong to the mainland. While the US capital markets are deeper and arguably better regulated, both Beijing and Washington have increased scrutiny of major Chinese firms listed on US exchanges in recent years, of course for different reasons. Alibaba is also having difficulty with its business in the United States and appears to be scaling back its global aspirations. According to UK-based Japanese-owned outlet The Financial Times, Alibaba.com has now slashed its target of signing up 1 million US small businesses to just 2,000 each year, and at least 35 staff working at Alibaba.com in New York have left their jobs in the past year, amounting to more than half of the team. The Financial Times writes, quote, most roles are not being replaced in a move by the platform to quietly retreat from the US market. End quote. And finally, the housing crisis. Shares in Country Garden Holdings, the largest real estate developer in China by sales, plunged 15% yesterday, Wednesday, after the developer announced a heavily discounted capital raise of $360 million. A sure sign that China's largest builder, a builder considered safer than players like Evergrande, is facing severe liquidity problems. The Hang Seng Mainland Properties Index, which tracks 10 of China's biggest Hong Kong-listed developers, followed suit, falling as much as 6% the same day. Country Garden Services, the firm's property management service unit, collapsed almost 20%. It appears that the market is surprised to learn what we have been following closely for months now, that the entire sector is facing a liquidity crunch, and now the housing crisis is bleeding into the real economy, threatening the financial system. The mortgage boycotts, for example, remain an ongoing policy challenge for regulators, something we should be discussing more in tomorrow's episode. Now, analysts point out that Country Garden has not defaulted on its debt, and its leverage is lower than that of other Chinese developers grappling with debt issues, most notoriously, of course, Evergrande with its $300 billion in liabilities. Quote, but the discounted share placement spooked investors. The sell-off comes as scrutiny of China's property sector has intensified in recent weeks. The country's property developers face a $13 billion wall of foreign currency bond payments due in the second half of this year. End quote. Some analysts argue that Country Garden is an Evergrande 2.0, in the words of one commentator, pointing out that the crisis is industry-wide and Country Garden's 2021 sales were almost double that of Evergrande's. Others disagree. Quote, this is not another Evergrande. It is one of the few that has not defaulted. That is a big difference. End quote. Well, we will find out in the coming months. Meanwhile, the property development industry continues its slow suffocation this week. Yitai reports that developer Power Long has become the fourth Chinese real estate company to announce a debt default in the last 5 working days. The default was for a $212 million bond due earlier this week. Okay, that is today's episode of China Update. Thank you so much, everybody, for watching. I'll see you tomorrow.